So welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have Euro USD's daily chart. All charts to be presented are to be of the same time frame, unless otherwise stated. We're going to be mixing technicals with fundamentals once again today. Starting with Euro USD, more or less, I would be highlighting that today we have no major financial releases expected from the Euro side of the pair. And on the flip side, we're concentrating more on the US dollar, given that we have the release of the Fed's last meeting minutes. Now, there is substantial interest of the market for the release, as practically after the cooling of inflation, after the inflation report, which showed cooler pressures in the US economy for the past month, there seem to be some expectations for the Fed to start cutting rates rather earlier than later. In our opinion, we may see the document actually showing the opposite. I wouldn't be surprised to see the Fed's meeting minutes showing some hesitation on behalf of Fed policymakers to start cutting rates. There is a relative uncertainty about or on whether practical inflation has decisively turned towards the bank's 2% target. There are still some worries about the sticky nature of inflation. May I remind you that the slowdown of April was not so substantial, actually. And if I was a Fed policymaker, I would continue worrying about inflation. Should the document actually show, or if you prefer, reflect this indecisiveness on behalf of Fed policymakers to start cutting rates, then we may see some support building up for the USD. I would be also noting here that comments which were expressed by Fed policymakers over the past few days and the end of the past week were more or less towards that direction. So I wouldn't be surprised to see the minutes not deviating. On the flip side, should the minutes show that there is, I wouldn't say certainty, but a readiness on behalf of Fed policymakers to start cutting rates, that may actually provide some bearish tendencies for the USD and would allow Euro USD to start rising once again. On a technical level, we note the slipping of Euro USD over the past 5 days. May I remind you guys, this is the daily chart, and we note how the pair has started to fall after reaching the 1.0895, 1, 2, 3, 4, 5 days in a row. So some bearish tendencies are present, but the big picture shows us that the upward trend line, which has been guiding the pair, and that has been since around the 1st of May, remains still intact. And for a change of direction, in my opinion, I would require a clear break of the prementioned upward trend line. And now there are 3 possible scenarios which could play out here. The first scenario would be that the price action of Euro USD actually bounces on the upward trend line and starts rising. Should that rise be accompanied also by a breaking of the R1 1.0895, the first resistance line right here, which would be forming a higher peak than this one, so that would be drop, bouncing on the upward trend line, rising, breaking the R1, and forming a new peak somewhere here. That would be confirmation of the upward movement and more or less would maintain the bullish outlook. The second possibility is of a stabilization. Now, should the pair breach the prementioned upward trend line, yet remain in the corridor set between the S1 and the R1, that would imply a possible stabilization of the pair and a sideways movement bias. For bearish outlook, we would require the price action to breach the prementioned upward trend line as mentioned, But I would also require the pair to breach the S1 1.0810 and start aiming for the S2 1.0730. Nothing less. That would also allow us to start drawing a downward trend line, which would be showing us also the limitations of the downward movement. The RSI indicator is dropping, but is still above the reading of 50. I would say that the bullish sentiment for the time being seems to be fading away. But that's all about fundamentals here. And I would be once again highlighting the release of the Fed's meeting minutes. Could provide substantial direction for the pair. On a technical level, the make or break point, in my opinion, would be the respect or not towards the upward trend line. Should the upward trend line be broken, we will be most probably switching our outlook from a bullish one towards a sideways movement or a bearish outlook. We will have to wait and see for that. Okay, let's have a look at USDJPY. USDJPY, which remained relatively stable yesterday, maybe even edged a bit lower, but practically the sideways motion of yesterday remains. Overall, there have been some bullish tendencies. We note that the price action is once again aiming for the 156.60 resistance line. But at this point, I would be noting that the bulls seem to be hesitant. For a bullish outlook, we would require a clear break of the R1 and the price action to rise and test the R2 158.30. Nothing less. On the other hand, the RSI indicator has been rising, has been distancing a little bit itself above the reading of 50, which implies the buildup of bullish sentiment. Once again, I would be noting here the release of the Fed's meeting minutes as a possible factor, as we have, I would say, some financial releases during tomorrow's Asian session from Japan, but usually JPY seems to ignore such financial releases. It's more sensitive to the market sentiment and its safe haven inflows or outflows. So the main release, I think, for the pair would be once again the release of the Fed's meeting minutes on a fundamental level. Also, should Japanese officials start warning once again about a possible market intervention or implying it, they're never actually saying it. We may see the market worrying a little bit and allow for USDJPY to consolidate or even drop a little bit lower, correct lower. On the other hand, the rise of the past 4 days, in our opinion, is a clear indication of the market's willingness to start or continue selling the yen. And at this point, once again, I tend to maintain a sideways motion bias between the R1 and the S1. For a bullish outlook, which seems to be imminent, yet has to be confirmed, and it has not for the time being, I would require once again the pair to breach the R1 156.60 and start aiming, if not even breach the R2 158.30. For a bearish outlook, the bar is high. It's quite remote. And for such a scenario, I would require the pair to break the S1 153.65 and start aiming for the 150.90. Now, despite some analysts mentioning the possibility of a double top formation being in the works, in my opinion, such a formation or the validity of such a formation is still premature. So I'm going to be ignoring it. Let's have a look at USD CAD. USD CAD, this is the daily chart, edging higher yesterday, actually breaching the 1.3640 resistance line, now turned to support. Let's change that. it was more of a weakening for the Canadian dollar rather than the strengthening of the US dollar. So that was quite interesting. Let's reposition also the labels and correct their contents so we get a clearer picture. There have been some comments by our team that we have a new support line at this show here. In my opinion, that seems to be somewhat valid, but I would require the pair to verify that level once again. So for the time being, I'm missing out on that. And let's correct the contents of the labels, starting with the S3, which is now being placed at 1.3480. The S2 at 1.3570. The S1 at 1.3640. The R1 at 1.3715. The R2 at 1.3785. And the R3 at 1.3845. Locking everything in. That's it. Let's talk direction. Now the direction of USD CAD seems to be upward for the past two sessions and today's one. Definitely the downward trend line has been broken, that's clear. Also note how the RSI indicator has reached a reading of 50, implying a rather indecisive market. And definitely an erasing of any bearish tendencies within market participants for the USD CAD. So for the time being, we tend to maintain a bias for the sideways motion to continue. Yet should the bullish tendencies be maintained and the pair breaches, say for example, the 1.3715 resistance line and starts aiming for the 1.3785, that would be, in my opinion, a clear indication for a bullish outlook. On the flip side, should the pair breach the S1 1.3640, and at this point, I would require the pair to actually test the S2 1.3570, so it has a lower trough than this one. Then we may be talking about a shift of the downward trend line and a new downward outlook, a bearish outlook. On the fundamental level, we have already mentioned the release of the Fed's last meeting minutes today after the American session. I would like to note also the fundamentals surrounding the Canadian dollar. We saw a slight drop of oil prices yesterday, which may have more or less fed loony bears, allowing for USD CAD to rise thus. And at this point, I would be also interested in the market sentiment. The Canadian dollar is a commodity currency. It's directly linked to oil, given Canada's status as a major oil-producing economy. It's being considered exactly due to that commodity nature as also as a riskier asset. So the market sentiment tends to be more decisive in its influence on the loonie. Should we have a positive market sentiment, more risk-oriented market sentiment, that tends to provide support for the loonie. On the flip side, should the market be cautious, then we may see the CAD weakening. So that's another issue which we should keep in mind on the fundamentals. And I would definitely be also noting the easing of inflationary pressures in the Canadian economy, which more or less tend to allow BOC to start cutting rates. And that could also be weighing on the CAD. Let's have a look at the pound. GBP USD on the rise has breached the 1.27 resistance line, now turned to support. Let's go hunting for a new ultimate resistance level. We have one here, and I'm setting another one all the way up here. Let's place them in red. Sorry. Being at the 1.30 level. And the next one at the 1.3142. Sorry, 1.3040 in red. Let's lock both in and readjust the chart. Sorry. Let's reposition and correct the labels and the contents. This could go a little bit lower. There's a nice show here, which I do not want to miss out on. And another one here. Let's place the labels, starting with the S3 at 1.2440. The S2 at 1.2560. The S1 at 1.27. The R1 at 1.2795. The R2 at 1.2890. And the R3 at 1.3. Locking everything in. Okay, we clearly tend to maintain our bullish outlook for the pair. And that's based primarily on two reasons. The first is the clear upward movement supported by an upward trend line, actually an intensification of the upward slope. All of that tends to imply that the bulls have it. I would also be noting, though, the RSI indicator, which is nearing the reading of 70. It's actually on the rise and nearing it, which implies a rather strong bullish sentiment on behalf of the market for the pound, or if you prefer, for cable as such. Should the bulls maintain control over the pair, I would be setting the next resistance line at the 1.2795, a level which was tested multiple times, once, twice, 3, 4, 5 times, even aimed for. While even higher, we have the R3, which is a very interesting peak, which was around the early to mid March at 1.2890. For a possible bearish outlook, despite that being very remote in my opinion, we may require the pair to breach the 1.27 support line, also breach the pre-mentioned upward trend line, and possibly start testing, if not breach, also the S2 1.2560. I think that the pound got renewed support during today's early European session by the release of the UK CPI rates. They were for April. Now, the headline rate on a year-on-year level was expected to slow down from 3.2% to 2.1% year-on-year. The rate slowed down, but not as much as expected. It slowed down to 2.3% year-on-year. That was a tad bit higher than the actual forecast. And was characteristic, allow me to drill out to the minute chart to show the market reaction at the time of the release. It was very, very interesting. Going back, here you go. Let's count this. It was a market reaction of around, 20 pips, 21 pips. So that was quite interesting and very indicative of the support provided by the market. And in my opinion, I would also be marking all this level here up to 30 pips. And the main reason why I'm saying this is because despite a correction lower in the following 3 minutes, you can see that the bullish tendencies were very clear. They peaked over here before starting to correct lower. Now, on a macroeconomic level, though, the slowdown, despite not being as wide as expected, was still considerable. Let's not forget that the bank's BOE's target is 2%. And in my opinion, the slowdown which was achieved in April may actually pave the way for BOE to start cutting rates. Maybe not in June, but in August. Should the CPI rates remain near or below the bank's 2% target. At this point, I would be also noting that also the core rate slowed down. Now, the core rate was at 4.2% year on year. It was expected to slow down to 3.6. It slowed, but it slowed only up to 3.9% year on year. That was above the market expectations and also tend to provide some support for the pound. So on the one hand, we have a definite easing of inflationary pressures. On the other hand, though, we may have still some way to go. But overall, I think that BOE may not have gotten a green light, but it's getting there to start the first rate cuts. On the USD side of the pair, definitely we have allow me to readjust the levels. Definitely we have the Fed's meeting minutes, which are expected to affect the pair as well. So that's an issue. And allow me now to move away from the FX market. Actually, why? Let's finish off the FX market by having a look also at the Aussie and the Kiwi. Starting with the Aussie, daily chart, edging lower yesterday and a bit again during today's Asian and European session. Despite the edging lower of AUD USD, in my opinion, the main element of the pair's movement has been the breaking of the upward trend line, which has been guiding the pair since, let's have a look, since the 19th of April. Now, some analysts may be pointing out that there could be a shift of the upward trend line to the right. Yes, but still, it's about to breach it. And if breached, that would signal exactly the interruption of the upward movement and would force us to actually switch our bullish outlook in favor initially of a sideways movement bias. The dynamics behind the dropping of the pair over the past 3 days have been relatively low. So more or less, I would expect the pair to maintain a sideways motion between the S1 0.6635 and the R1 0.6710. Should the S1 be breached and the pair starts clearly aiming for the S2 0.6555 or even tested, then we may start talking about a bearish outlook. Mind you, the RSI indicator is still above the reading of 50, but falling, implying an easing of the bullish sentiment of the market for the pair, but not the buildup of a bearish one yet. At least not yet. Now, Aussie-wise, once again, it's a commodity currency. It's considered to be of a riskier nature. I would be highlighting the market sentiment as the fundamentals drive the pair. We have also the release of the preliminary PMI figures of Australia tomorrow for May. There could be some movement there, but it's quite doubtful. Let's have a look now at WTI. WTI, which continues to edge lower after relative inactivity yesterday. Let's drill into the daily chart. Nope. 1, 2, 3 red candlesticks. It's dropping since Monday. But the drop is not as wide as to argue for a bearish outlook. In my opinion, the pair seems to be in a sideways motion. Let's readjust the label so we get a clearer picture here. That's better. I'm deleting the commodity channel index, raising a little bit the RSI. Sorry. We're set. Allow me to highlight the sideways motion since the beginning of the month, which can be culminated something like here. It's interesting how the pair remains in a sideways motion between the $179.50 and the $176.65. We tend to maintain the bias for the sideways motion to continue. One small warning about any bearish tendencies, which are practically visible, or if you prefer, indicated or implied by the RSI indicator, which remains steadily below the reading of 50. It's actually between 30 and 50 constantly since the start of the month. And I would be also noting here that we have moving averages. The blue line here, the median of the Bollinger Band, which is the 20 moving average, the green line, which is the 50. Both are pointing downwards. Also note how the 20 has crossed the 50 moving average, implying an expedition of the downward motion or of the bearish sentiment. My opinion, though, it seems that the commodities price action has stabilized somewhat in the pre-mentioned corridor. It's around the $3, actually it's $2.85 corridor between the R1 and the S1. For a bearish outlook, I would require a clear breach of the S1 and the price action to start aiming, if not even breaching, the S274.45, nothing less. For a bullish outlook, the price action would have to breach the R179.50 and possibly also the R281.10. Let's have a look at gold. Okay, definitely the S1 now has formed a new resistance line as it was breached briefly on Monday's Asian session after the accident of the Iranian president with the crashing of his helicopter. Since then, market woes have eased, and we can see how the bullish tendencies practically were reversed, and the price action of gold is edging a little bit lower. I would be requiring, though, a new ultimate support line, setting it on this support level here. It was a former resistance line. Now that the price action is above it, we tend to maintain the view of it as a support line at 2,195. Let's have a look at 2,200. Could be. Nice round figure. Let's position the labels. By the way, we have to widen this a little bit. Starting with the R3, which is set at 2,575, with the R2 at 2,500, the R1 at 2,430, which is practically an all-time high. There was a breach. Clearly, there was a breach on Monday, but in my opinion, that was a false break. It didn't last to actually consider this a clear breach. And the S2 at 2,275. The S1, we forgot about that, at 2,355. 200. Locking everything in. Now, despite the correction lower of the precious metals price, I would still see the case for a bullish predisposition, basing it on this upward trend line here. And also note how the RSI indicator, despite edging lower, remains quite high. It's currently at 64.3. There is still a residue of a bullish sentiment in the market, which at any point could drive it higher. But given that we're talking about a new record high here, bulls may be hesitant. Once again, though, to switch our bullish outlook, we would require a breach of the upward trend line. And should the price action of gold in its drop also respect the S1 2355 support line, then we would be talking about a sideways movement bias. If the S1 is also breached, then we would be talking about a possible bearish outlook, especially should the price of gold start aiming for the S2 2275 support line, a level which was tested here but also aimed for here. And I think, in my opinion, that's a pretty valid level for support line. I would also like to have a look at NASDAQ. We still got a couple of minutes left. Nice upward trend line. And at this point, I would be noting, let's draw the trend line. Now, the big question today is NVIDIA's earnings report. We haven't seen such a focus on a specific company's price for a very long price among analysts. So for a very long time among analysts. And I wouldn't be surprised to see that. Okay, we definitely need to correct the labels here. I wouldn't be surprised to see NVIDIA's earnings report actually shaking the market. Mind you that the rally of US stock markets was largely based also on artificial intelligence and its potentials. NVIDIA, which is a well-known chip maker, benefited the most out of it. So should we see more or less NVIDIA's earnings report show a healthy financial state with possibly better than expected earnings per share figure, EPS, or an increased revenue figure, that could more or less intensify the optimism among market participants in general and lead to a new rally. On the flip side, should the earnings report of Nvidia later today disappoint traders, we may see US stock markets taking a turn to the worse. I would be noting the mixed signals over the past few days. And I would also be I would be also mentioning here that we have a simultaneous, it's not exactly simultaneous, but they're very close release of the Fed's meeting minutes, which could also have an effect on US stock markets and Nvidia's earnings report. Mind you that the report of Nvidia is to be released after the closing bell, and practically we may see the full effect of the release on tomorrow's open. It's going to be a very, very interesting release. I would like to have a second look. For the time being, we tend to maintain a bullish outlook, but the upward trend line is being put to the test. And note that the differentials here are practically narrowing, which may imply some fatigue on behalf of the bulls, foreshadowing a possible downturn, in which case we would require the index's price action to actually break the upward trend line, but also break the S3 18,000 and a half. We're always talking about Nasdaq here. Let's have a look also on Dow Jones if we have similar reports. Yes, also some stabilization over the past 3 days, 4 days. So more or less the market is in a wait and see position. It's going to be an interesting American session today, especially after the close. So thank you very much for watching. I hope that we covered some trading needs of you guys. From all of us here at IronFX, best wishes for solid trading.
So welcome to this week's trade management webinar. So today we're going to be talking about trailing stop loss. So as per usual, before we get started, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie, and I am your host for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. Okay, we will firstly talk about the anatomy of a trade, followed by some recap of last week and the previous week's information, some trade management techniques, just a really brief recap on those. And then we'll jump straight into this week's trailing stop loss techniques. And we'll look at some examples of them as well. And if we have time at the end, we'll also go through a couple of live analysis charts. So feel free to pop into the chat if you have any questions or any requests for any charts that you guys would like to see. Okay. Now let's go ahead and get started. So the anatomy of a trade. Firstly, of course, we have our entry, stop loss, and take profit, and then followed by our break even, partial profit, trading stop, and idea invalidation. So let's look at. I think if you were here in our previous webinars part of this series, you would know that you would know what exactly these break-even partial profit trading stop means, or idea validation rather. But not to worry, if you weren't here, I'll just do a brief recap right now. Okay. Okay, so firstly, let's look at our take profit stop loss placement recap. So we typically would recommend you to place your stop loss beyond a major resistance area and your take profit before a major resistance area. So if you're wondering about this, let me just pull up the Forex Army website so that you guys can see. So if you're new to technical analysis, right? If you're new to technical analysis, you can actually just go to this website. Let me just pop it into the chat in a bit. But go to this website and then you guys can look at all the different Fibonacci techniques. Yeah, here. So we typically will recommend you to place your take profit before a major confluence area and after a major confluence area for your stop loss. So in this case, we are looking at a buy entry. In this example that I have here on my slides, obviously we are talking about a sell entry since our take profit is below instead of above. Okay, so I just wanted to pull this out to show you guys the variations if you're looking at a buy entry versus if you're looking at a sell entry. So maybe I'll just type out the website in the chat. It's theforexarmy.com. Okay. Yeah, you can go ahead and explore that website on your own. And okay, so we went through this in our very first part of the trade management series. Okay, next we're gonna look at break even. So break even is basically a level in which you are in profit and recognize that there is a risk of reversal. So it's basically you saying that if you are right, then your price should go all the way to your target. But if it goes back to your entry, then you are wrong and you should get out. So over here, we have an entry at the breakout. Over here, Okay, so we have two multiple swing high resistances, and we're going in for our entry at this breakout of this resistance level. Okay, so we're hoping for price to push past our take profit, which is over here, the green area here. So we take note of our original stop loss, which is below here at this swing low. Okay, and at point 3, which is over here, that's where our break even was triggered. So it's where our break even is triggered because your break even level, which is typically in between your entry and your take profit level. So we've chosen this area since it's a swing high resistance level. Okay, so we are going in for a buy. We're expecting price to rise from our entry all the way to this level here. Okay, and we see that price has reversed off of our break even, and that's where our break even is triggered. So we are going in and moving our original stop loss over to our entry instead. Okay, so you see me keep constantly looking to the side. It's because my monitor is over here. Okay, but yeah, so our break even is triggered. We are moving our stop loss over to this entry level so that if price continues in our favor, which you see it originally did, okay, it's continued, broke out of the break even resistance level and hit it towards our take profit, then of course that's good news. But if it reverses, you can get out at break even and your position is protected. Okay. Okay, so in our second part of the series, we talked about break even and partial profit. So we just talked about break even. Now let's look at partial profit. So partial profit basically means, as the name implies, you get a partial profit of your trade because the trade perhaps didn't meet your expectations, didn't hit your take profit, but it hit halfway or maybe 3/4 of your trade. So in this example, we are going in for a buy entry at our first support level. Okay, so our first support level is at the 0.68736 level, and our stop loss is placed slightly below that at a overlap support level. As you can see, there is a swing low here and a swing high here. Okay, so we've placed our stop loss slightly below that, and our take profit is over here at 0.70512, and it's at this swing high resistance. Okay, we have a couple of Fibonacci levels to support our levels as well. So firstly, we have a 61.8% Fibonacci projection. Okay, that lines up with our take profit, but excuse me. But then we also notice that we also have a 78.6% Fibonacci projection and a 38.2% Fibonacci retracement that lines up nicely with our partial profit. So if you're thinking where exactly should you place a partial profit, firstly, you can pick any levels that's in between your first support and take profit. You can look for levels that have a swing low or swing high. That's basically how you identify levels. Okay, that's the first step. Next, you could maybe look at supporting that level with Fibonacci levels like we have done over here. So you can see our partial profits at the swing low level. Okay, but it's also supported with 2 Fibonacci levels, making it a pretty significant Fibonacci confluence area. Okay, so we're expecting price to rise to our take profit, of course, but there is a strong resistance at this Fibonacci confluence area, so that's why we're placing our partial profit there, just in case price isn't strong enough to push past that area. So you can see price testing this area now. Okay, yeah, so you can see price testing that area, and it's reacting off of it, but we're not sure if it's actually gonna pass surpass that area or break out of that area. Okay, and you can see that it actually reversed off and hit it back down. So we did get out of our trade with a slight partial profit, even though it didn't hit our take profit. Okay. Next, we have idea invalidation. So we went through this last week as the third part of our series. So idea invalidation is usually placed before your stop loss. So it's basically the opposite of your break-even levels. So for break-even, we would move our stop loss to our entry, but in this case, we are moving our take profit to our entry instead. Okay, if I sound a little bit sick, it's because I'm just recovering, so bear with me in that. But okay, so it's the level at which you basically admit that you are wrong and you want to get out of the trade ASAP. So when this level is reached, your take profits move to your entry, giving you a small chance to get out then. So in this example, we're looking at your entry at this double swing high level. Okay, we see price dropping, reversing off of that resistance and heading downwards to our take profit. You can see how we've placed our take profit before a major confluence area or major resistance area. As you can see here, we have 3 swing lows. So we're placing our take profit slightly above that. Here we see price reverse and it's heading up towards our stop loss. Okay, so the point in which your idea invalidation is triggered is at this point. Your idea invalidation, as we mentioned earlier, is placed in between your stop loss and your entry level. So we've chosen the swing high level here. So once price hits that level, even if it does reverse back down towards your favor, we're moving our take profit upwards to our entry so that we get out of the trade at break even before price rises even further and stops us out. Okay. Okay. Let's look at some examples now. So in this example, we have a swing low here, and we've placed our buy entry at that swing low, and we have a Fibonacci 50% Fibonacci retracement that supports our take profit level. Our take profit level, as you can see here, is an overlap level because we have a swing low and a swing high that line up nicely at that level. Okay. So you can see our entry, so our entry is at that level. And now we are going in with our Fibonacci extensions as well as expansions. So if you're not familiar with what those are, we basically go through those in our Fibonacci series. But you can also check them out on the forexarmy.com, which is the website that I have included in our chat. Okay, but basically you can see how our 127.2 and the minus 27% line up nicely. So I'll show you guys in a little bit during our live analysis session how you can obtain these levels. Okay. Okay, but yeah, for now you just look at these levels, see how they're aligning. That's basically giving us a Fibonacci confluence area. Okay, so yeah, so you can see entry and our price. So we're placing our stop loss below our Fibonacci confluence area here. Just like we mentioned, we always want to place our stop loss beyond any confluence areas. Okay. And now our idea invalidation, we are placing exactly at that level. Okay, so if price breaks out of our entry, hits downwards towards our stop loss, okay, at least when it hits our idea invalidation, we will get out at break even. You can see that's exactly what happened over here. Okay. And then once it hits our idea invalidation, we then move our take profit down towards our entry. Okay, so that we get out at break even. Okay, that's basically it. Yeah, so if we didn't do that, price would have stopped us out because price actually continued to drop. Okay, so now let's look at this week's topic, which is our trailing stop loss. Okay, so trading stop loss is basically a type of stop loss order that is set at a certain percentage or dollar amount away from the market price. The idea behind a trading stop loss is to lock in profits while giving the trade room to breathe, as the stop loss follows the market price as it moves in favor of the trade. So, this example that I have over here is in terms of stock prices. But it's just to give you an idea of how it works. So let's say you buy a stock at $100 and you set a trading stop loss at $10. As the stock price rises to $110, the stop loss will follow, now at $100, because 110 minus $10. So if excuse me, if the stock price drops to $100, your stop loss will trigger, selling your position and protecting your profits. The trading stop loss technique can be useful for traders because it allows them to manage risk and lock in profits dynamically as the market moves. Okay, so this is different from a fixed stop loss, which is set at a specific price and does not change as the market moves. So it's important to note that the trading stop loss is not a guarantee that you will exit a trade at the desired price. Market conditions such as gaps or rapid price movements can trigger stop loss order before it reaches the desired level, leading to an unexpected exit from the trade. Therefore, it's important to use trailing stop loss in combination with a solid risk management strategy. So if you combine this with all of the methods that we've mentioned above, and throughout the past 3 webinars, you're pretty much set for your trade management strategy. Okay, so here are the different methods of a trading stop loss. You can see we have moving averages, chandelier, parabolic SAR, ATR, so on and so forth. Okay, even support and resistance levels and a combination of these methods. So let's go through our first example, which is the moving average. So in this example, we are going in for a sell entry at this level here, the 1.57891 level. Okay, so once price breaks out of that area, then we're going in for a sell. And the reason for that is because you can see that we have an ascending trend line. Okay, so what makes an ascending trend line valid is if there are 3 touches on it. You can see very clearly over here we have 1, 2, and 3. Okay, and on our third point, you can see price breaking out of that ascending trend line and also breaking below that overlap support level. Okay, so it's breaking below it and we're going in for a sell. So you can see here, price has continued to drop. Okay, and price is moving below our moving average, which is typically a sign that a bearish signal. Okay, if price moves below your moving average, it's typically a bearish signal. And once you see price cross over your indicator, that's a sign that that the trend might change, and that's when your trailing stop loss is triggered. Excuse me. Okay, so that got us out of the trade before price started to move upwards. Okay, pretty self-explanatory. Now let's look at a trend line breakout. So we have one trend line here, but we have another one over here, as you can see. Okay, and so price is moving in this descending trend line, and we see price breaking out of our descending trend line. So that's typically a sign that trend is going to change as well, and your trend line trading stop loss is triggered, so you get out of your trade, of your selling trade. Okay, if we look at our parabolic saw, pretty similar in logic, I guess. In this case, we see price moving below the indicator, so it's also a bearish signal, and then we start to see price giving us this, price moving above our parabolic saw, so it's giving us a bullish signal, and then we see price crossing over our indicator. So then our parabolic saw trading stop loss is triggered. Okay, now if we look at chandelier and ATR trailing stop loss, okay, we have our sell entry at that same spot, okay, and price is moving below these indicators, so it's a bearish signal. And once price crosses over these indicators, our ATR stop is triggered, chandelier stop is triggered, and you get out of the trade. Okay, pretty self-explanatory there. Yeah, so if we combine different indicators, obviously your trailing stop loss will be more effective. So here we see our moving average indicator being used. So price is breaking below our sell entry as well as our moving average. So it's giving us a bearish signal. So we're going in for a buy, or rather for a sell towards our take profit. And you can see we've placed our fixed stop loss over here, right at this swing high here. Okay, but we're going in for a sell towards our take profit, and once price crosses over the moving average indicator, that's a sign for us to get out of the trade, because it's typically a sign that the trend is changing. Okay, similarly for this example as well. Okay, using breakouts as trading stop loss. So breakouts are usually high volatility events, and price can spike up and reverse almost as quickly. So stop loss will help you to manage risk and protect your capital, and a trailing stop loss can help you to protect your profit. So in this example, we're using chandelier and ATR. Okay, so we see, and we're also using support and resistance here. Okay, so you can see that we're going in for maybe a buy entry here. Okay, so we're seeing price moving above our indicators, which is a bullish signal. Once price kind of starts to cross over each other, that's a sign that the trend is going to change. Similarly, over here, we are using support and resistance to highlight the different levels that we want to pay attention to. And then we're seeing price moving above the indicators. So once again, a bullish signal. And once price crosses below the in this case, it's a resistance. Okay, so once price crosses over this resistance level and it also crosses over our indicator, that's a sign that the trend is about to change. Similarly, for this example, we are using a moving average indicator instead. Okay, but it's the same concept. You see price moving above the indicator, it's a bullish signal. If it's moving below, you can see it's a bearish signal. And if it crosses over, it's typically a sign that um, that the trend is about to change. Okay, that's about it for my slides. We still have a bit of time left, so we can take a look at some charts. Let me just pull up my charts really quickly. Okay, let's maybe go ahead and look at gold first. Okay, okay, so starting off, we're gonna look at our weekly time frame. Okay, so on our weekly time frame, okay, let me just make sure that okay, okay. So on our weekly time frame, okay, this is what our charts look like. It's pretty bearish, okay. Um, on our daily time frame, also pretty bearish. Okay, now let's look at our 4-hour time frame. Okay, first on our daily time frame, let's add some support and resistance levels. So firstly, this is our first resistance. Okay, and then our first support. And maybe second support here. Okay, now let's look at our 4-hour time frame. Okay, I think this would be my first support instead now, because it's closer to where price is at. And then this would be my second support. Okay, now let's go in with some Fibonacci levels. Okay, I'm first gonna go in with first gonna go in with a Fibonacci projection. So I have my 61.8% that lines up nicely with my first resistance. Okay, and next let's go in with a retracement. So my 38.2 lines up nicely with my 61.8. Okay, and over here I can see this level, 50% lines up with the 23.6. So I'm just gonna keep those two as well. Okay, so I'm actually gonna add a level here because this is an intermediate level. Okay, because I have Fibonacci confluence area here, and I also have some swing highs over here. Okay, now let's go in with some indicators. Okay, price is moving above our Ichimoku cloud, so it doesn't support our bearish analysis, but on our MACD it is bearish. So I'll just get rid of our Ichimoku. Now let's look at RSI. Okay, RSI isn't telling us much. Let's look at stochastic. Okay, on our stochastic, we are seeing a bearish divergence. Okay, so between these two lines, you can see price is pretty price has stayed the same level at our first support, but on our stochastic, okay, it gives us a price is making a lower low. Okay, so that's a bearish divergence. Now let's look at moving averages. Let's look at MA, simple, and exponential. Okay, price is moving below both of these indicators, though it does look like price is breaking out of our EMA or SMA. So I might remove that. Okay, because it doesn't support our analysis. Okay, that's about it for our dollar franc. Okay, so we will definitely see price testing this level a bit. Okay, we'll see price testing this level because of the confluence area as well as the overlap levels. But yep, I think ultimately it will continue in the downward because of the downward pressure. Okay. Okay. I think we still have a bit of time left, so let's look at gold. Okay. Same thing, we're gonna look at the higher time frames first. Yep, I think this video, this because this webinar is being recorded, so I think they will upload this onto YouTube. So I think you will be able to get it there. But if not, I think you can email the IronFX team and they'll be happy to help you out. But it is being recorded, so you should be on YouTube. Okay, so on our weekly time frames, we can see it's pretty bullish, right? On our daily time frame, okay, on our daily time frame, we can't really tell because it's kind of trending. Okay, now let's just go in with our support and resistance levels first. Okay, and for my first support, maybe here. Okay, and okay, now on our 4-hour time frame, I think most of these levels still hold up on our 4-hour time frame. But I think instead, I want to place my first support here instead. Okay. Second resistance, maybe here. Okay, now let's go in with our Fibonacci levels again. So I can see my 78.6 lines up nicely. I want to see if my 61.8 lines up with any other important Fibonacci levels. Okay, so I will test that in a bit. Now let's look at projection. So 61.8. Okay, all of these levels price has already broken out of, so that's no longer valid. Hmm. So I think that's all the levels that we have. Okay, my 61.8 lines up nicely, and my 50% as well. Okay, that's all the levels that we have here. I'm actually going to remove the 61.8 because can't find any other levels to match up with that, as well as our 50%. Okay, now let's go in with our indicators. I'm going to use MACD, Ichimoku, and RSI again, because at one glance you can see exactly what the signals are. So on our Ichimoku, you can see that price is moving below the Ichimoku cloud, so it's giving us a bearish signal. On our MACD, you can see it is giving us a bit of a bullish signal, so I'm just going to remove that. Okay, on our RSI, okay, price is actually giving us a bullish signal here. Okay, because it is breaking out of the descending trend over here. So I'm gonna move that. Let's see. Ooh. Let's look at moving averages. Okay, price is moving below both of the moving averages, so it supports our bearish signals. And let's look at Bollinger Bands. Okay, Bollinger Bands aren't really telling us much. So remove that. Okay, let's look at stochastic. Okay, stochastic gives us a descending trend line. So that also supports our bearish signal. Okay, so because there are so many indicators, it's important to just pick a couple that you are comfortable using and that you know how to use properly. Yep, and then just flip through those few after you're done doing your Fibonacci as well as graphical analysis. And then, yeah, just go from there. So if majority of your chosen indicators give you an opposite signal of what you are going for, then maybe you can go back and check your analysis again. But normally, if you've done it properly, most should support your own analysis. Maybe not all, like you've seen over here, RSI and MACD didn't support this analysis, but you can see that my stochastic, my moving averages, as well as my Ichimoku all support my analysis. So yeah, let me know if you guys have any other questions. Okay, if there are no other questions, that's it from me for today. Thank you guys so much for joining me. I am so sorry for my voice. Um, I'm just recovering from the flu, but I will be better next week, hopefully. And I'll see you guys then. Have a great rest of your week, everyone. Bye. No worries. I'm sure I'll be better by next week. Thank you. Bye, guys.